Hello everyone. Recently there's been a major global agricultural price crash. So in this video we'll analyze what will be the impact of that on India. So firstly, there has been a supply glut in the world of all the agricultural commodities that are listed here. Primarily because the demand slowed down because of the global recession, and also because over the past few years the agricultural prices were at a very high. So the production was increased by the producers as much as they could, which led to, both these factors led to a supply glut. So as you can see, compared to a year ago and 2 years ago, the prices have fallen very sharply. In case of corn, you can see the prices have nearly halved from 7.4 2 years ago to 3.74. Similarly, in other commodities also, the prices have really fallen a lot. Now, what is the impact crop wise? Soybean and corn were our export products. Now the exports of these will fall because the export prices are not that lucrative for the farmers, so they will not really be willing to export, which will hit our foreign exchange earnings. In case of palm oil, it's good for us because it'll amount to lower import costs. In case of wheat and rice, we are major producers, and if the export prices are less than MSP, there are two factors that are going to happen. Firstly, the exports are going to get hit, and also we cannot raise our MSPs because already we would have a cheaper substitute of imported wheat and rice available. So the rationale for increasing the MSP will not be there. Now, in the past 10 years, what had happened was that farmers benefited due to increased production and also rising prices. So the productivity increased, the production increased, and also the prices were rising, which led to higher price realizations, higher profits for the farmers, and basically the rural incomes went up very dramatically, and the rural poverty consequently came down again very dramatically. This was the story over the past 10 years. So the impact, it can be seen, was rising rural incomes, sharpest decline in rural poverty rates for any decade, and it also forced center to substantially raise the MSP because the prices globally were high, so the MSPs obviously had to match up to those prices. And also the exports were very high because the foreign prices were so high that there was always an incentive for the farmers to export. So the export soared from $7.5 billion in 2003-04 to $42.6 billion in 2013-14. In fact, in the last 2 years, we exported 6 million tons of wheat and 4.5 million tons of corn. Now, what will happen now? Like I've been mentioning, when the export prices are below the corresponding MSPs, it will mean that the exports will contract. It will limit the scope for MSP hikes. MSP is minimum support price, which is the minimum price that the government says will pay for a product, like say wheat. They'll say this is the minimum that we will pay you. If you get a higher price than this elsewhere in the market, you are free to go and sell there. But this is the floor. So your price, the price that the farmer realizes, cannot go below this MSP. So it will limit the scope for MSP hikes. So because that would only widen the wedge between domestic and international prices, apart from adding to public grain stocks already 2.5 times the required levels. So what does this mean? Because in the market the prices are much lower and they are not increasing, most of the farmers would actually look to sell at the MSP to the government. So when the government keeps increasing buying the food grains, the public grain stock will keep increasing. Now already the grain stocks are at a higher level than the required levels. You may have heard last year there was this whole controversy last year and before that where the grains were rotting in the godowns, and the Supreme Court actually told the government to give the food grains out to poor for free if they were not able to maintain the food grain stocks, and also if there were no takers. So this problem is going to get further accentuated because the MSPs would be higher than the prices in the other markets. Clubbed with it, we have the global oil price crash. This will now also restrict the scope of diversion of corn and palm oil for biofuel usage. So earlier, this was a major substitute that was coming up. So a lot of corn and palm oil was being used for biofuels because the prices of oil were so high that the substitutes were actually lucrative, and people were investing to produce those biofuels. But now with the global oil price crash, there is no incentive to produce biofuel anymore. So again, the demand for corn and palm oil will reduce even further. So also it makes commodities that much less attractive as an asset for fund managers. So earlier what was said was that the commodity prices will go on increasing, so people invested a lot in these commodities, because of which the commodities were increasing in the prices. But now with the fall in the prices, it is no longer considered to be a safe asset, and because of which the fund managers will not invest in commodities. So it'll lead to a vicious cycle. So earlier, when the prices were high, the fund managers thought that it's a good asset, so they invested more in that, and the prices rose further. But now with the falling prices, all the investors will pull their money out of commodities, because they will feel that okay, this is not a good asset class, the prices are falling, so the prices will fall further, because the demand is reducing from the fund managers as well, so the prices of these will fall further, and again the remaining fund managers will also pull out. So it can cause a global cycle wherein the prices keep falling. So that is another impact that could happen. But there is one silver lining, is it will enable a further easing of inflationary pressures, which may embolden the Reserve Bank to also increase their rate cuts, because a major reason which was given for the inflationary pressures in the economy was the supply side effects of higher commodity prices. But with those easing very dramatically, the inflationary pressures in the economy would come to a halt. With this, I'll end this video. Thank you for watching. Hope you like the video. Comments and suggestions are welcome. Thank you.